consumers' willingness to spend is for the first time in over a decade starting to buckle.
Global macroeconomic issues, geopolitical issues, inflation, interest rates, loan repayments. I mean, we've got that sort of pile up wears on the consumer and makes them wary.
For the second time since May, the massive US retailer Walmart has issued a profit warning as rising food and fuel prices affect consumer spending. According to the company, it now projects a 13% decline in profits this year. Walmart's unexpected decision signals a warning bell for the retail sector, an expert told the BBC. In New York's after-hours trading, the company's stock market value plummeted by about 10%, while shares of rival shops Amazon and Target also experienced steep declines. Walmart had earlier stated that it anticipated a mere 1% decline in its annual profit this year. Following the close of US markets on Monday, Doug McMillon, the company's chief executive, stated in a statement that the increasing levels of food and fuel inflation are affecting how customers spend. The company, he continued, was anticipating more pressure on general merchandise in the back half of this year, which is why it intended to lower garment costs. According to Neil Saunders, Managing Director of Retail at data analytics company Global Data, consumers are having to spend a large portion of their income on necessities and are cutting back on other purchases as the cost of food and gasoline rises. According to Mr. Saunders, Walmart's warning implies that a large number of other shops are experiencing pressure. Walmart has a unique level of purchasing power that helps offset some of the inflation, but as the announcement made today demonstrates, rising expenses affect even the wealthiest, he said. The world's largest online retailer, Amazon, also hiked the cost of its Prime program for UK consumers on Monday for the first time since 2014. The company cited increased inflation and operating costs as a reason for the increase. Prime provides unlimited product delivery and streaming services for entertainment. Rising fuel and food prices are causing prices in the US and the UK to rise at the quickest rate in 40 years. Everyday costs for households and businesses have increased due to the pandemic and the crisis in Ukraine. Walmart announced in May that it possessed over $60 billion worth of stock and promised to implement aggressive price reductions on select products. Additionally, the business cut its profits projection for the first time. As a result, its stock had the largest single-day decline since 1987. On August 16, Walmart is expected to release its second quarter earnings. Like millions of other customers, you likely visit Walmart to get everything from bigger priced products like gadgets to last-minute groceries. The store was the first choice for necessities even before inflation started to become a major concern because of its accessibility and consistently low prices. To be profitable, the retailer must still deal with a number of internal issues, which may need closing certain stores. Additionally, the CEO of Walmart has vowed to impose further price increases and shop closures in the future. It's no secret that shifting business trends and unanticipated crises have made life difficult for the retail sector in recent years. Not only was the COVID-19 pandemic recovery a challenging one, but many people are now having to deal with the pressures of inflation and labour shortages, which force store closures. But Walmart, being the biggest retailer in the country, has been lucky enough to escape many of the same problems. In the face of growing costs and more constrained budgets, the corporate leaders earlier this year discussed how their policy of consistently low prices and the usage of rollback sales signage could help keep customers coming back. During a post-earnings conference call in February, Doug McMillon, CEO of Walmart, said to analysts, "We use rollbacks to communicate not only the reality that prices are coming down in some places, but the emotion or perception we want customers to have about us," according to CNN. Naturally, the business hasn't escaped the current economic climate completely. RatherBeShopping.com reports that in the last 6 years, the company has closed more than 160 locations across 27 states. The corporation claims that restructuring frequently boils down to watching the bottom line, as demonstrated by the Pittsburgh location's closure in late October. Walmart representative Felicia McCrane told CBS News this decision was not made lightly and was reached only after a thorough review process. Our decision is based on several factors, including historical and current financial performance, and is in line with the threshold that guides our strategy to close underperforming locations. The company's senior management is already cautioning that additional changes might be on the way. The CEO of Walmart has issued a warning, indicating that the company may soon face additional store closures and price increases. In an interview on CNBC's Squawk Box on December 6, McMillon discussed some of the recent struggles the business has encountered. In particular, he brought attention to the rise in stealing, a persistent problem that affected some of the retailer's choices. He also emphasized the problem of prosecutors failing to enforce rules designed to prevent criminals from stealing from shelves, warning that if the matter is not addressed now, there may be significant changes in the future. The CEO of Walmart issued a warning: if that's not corrected over time, prices will be higher and stores will close. He clarified that the retailer's stealing rates are higher than normal. According to Macmillan, shoplifting is occurring more frequently than it usually does at the company. Theft is a problem. In the interview, he told CNBC that it was higher than it had ever been. He did not provide a precise figure, but the store has demonstrated in the past that it is accustomed to seeing significant shrink rates. According to the corporation, theft costs $3 billion annually, or 1% of its $300 million in revenue, as reported by Reuters in 2015. The CEO of Walmart continued by saying that the business has started using its existing mechanisms to solve the problem. We have implemented safety and security protocols specific to each store location. I believe that half of the solution is local police enforcement, being staffed and being a good partner, and that's usually how we go about it, he stated. The CEO did not specify which locations were particularly at risk of store closures. Macmillan issued a day warning. He provided no details about which locations were most likely to see long-term closures soon. According to the Labor Department, the rate of increase in prices or inflation rose by 1.3% in May alone and reached 9.1% in the year ending in June. Last month, gas prices in the US reached all-time highs, averaging more than $5 a gallon. Predictions based on this indicate that later this month, the US Central Bank will raise interest rates even more. Based on figures, the US inflation rate increased from 8.6% in May to its highest score in November 1981. Although there was initial optimism that a shift in spending from commodities to services would help curb inflation, intense labour competition has raised wages, which has fueled more price increases. Due to severe weather-related food price increases and COVID disruption of the supply chain, prices have been rising in the United States since last year. Global commodity prices have also increased as a result of fighting in the Ukraine. Additionally, some economists attribute the acceleration of price hikes to President Biden's COVID-19 expenditure initiatives. It used $5 trillion in stimulus money overall to protect businesses and individuals from the pandemic's economic blow. The White House began downplaying the figures earlier in anticipation of the most recent data, referring to Consumer Price Index as a tool that looks backwards. It's also true that these figures only show the price rises from previous month, excluding more recent price decreases, particularly in the gas industry. However, the data does demonstrate how severely American families' finances have been impacted. Individuals are already altering their spending patterns and paying for housing and food with their savings. The American hourly wage real wealth has decreased more quickly than it has since the 1980s. And that's what the party and US President Joe Biden are concerned about. The November midterm elections will determine the fate of the Democrats' razor-thin majority in Congress. However, voters are thinking and feeling the pinch of the high cost of living. In order to control skyrocketing prices, financial markets anticipate that the US Central Bank will hike interest rates once again during its meeting in 2 weeks. In the previous month, it declared the largest rate increase in almost 30 years, bringing its benchmark interest rate up by 0.75 percentage point to range between 1.5% and 1.75%. It is predicted by many to hike rates by a comparable amount in July. That's all for now. What do you think of the rise in prices? Let us know in the comments below. Thanks for watching. For more videos like this, subscribe to our channel.